Anyway, Wall Street. Stocks soaring on the news. The economy is not hammering profits after all. The Dow picking up 228 points. It is up more than 500 points this week. We're hearing how terrible everything is on Main Street, that oil prices keep hitting new highs, which they do and did again today. So what's going on here? Is Wall Street trying to tell us something? Let's ask Matthew Tuttle, Tracy Burns, and Jonathan Hoenig. Matthew.
Well, I think Wall Street's predictive power recently, if they're trying to tell us something, then we shouldn't be listening. You know, this whole thing...
So you're not buying today?
I'm not buying today, no. Today we're selling.
Okay, interesting. So, Jonathan, we've seen these days where we had triple-digit advances, oftentimes followed by triple-digit declines. The only thing I want to go over with you, Jonathan, is the fact that we tend to disconnect now from oil to our own detriment.
Well, you know, Neil, sometimes oil and the market are positively correlated because the thought is that a stronger economy will mean more demand for oil. So, you know, sometimes those correlations do hold up. I mean, I think the thing, though, is that even though the banks were up today, they're just not leadership stocks. And we see time and time again the market has a tendency to anticipate the news. I mean, the banks started being weak last summer, and it's just in the last couple of months we've actually started getting to this whole notion of a credit crisis. The leadership right now is still with energy. So I think for the better or worse of the stock market, you're likely still to see higher energy prices in the months ahead.
And we should say one of the saving graces of the markets were that they're still worried about this credit crisis, Tracy, but things don't apparently stink as much as we thought, right?
Right, and I actually think the market is acting rationally these days. I mean, look at Google's numbers. Those were legitimate numbers. IBM had legitimate numbers. And you know what? The bar's been set so low on these financials that basically anybody could jump over the expectations that we were expecting. And that's what we needed down there. We needed some positive sentiment for people to put their money back in, and that's what we're seeing.
We should say, Matt, that Citigroup, for example, reported a $5 billion loss, you know, $12, $13 billion in write-downs, and we were surprised that it wasn't worse, right?
Well, yeah, I mean, to me, this whole rally is like the party after a funeral. I mean, it doesn't make a whole lot of sense. And, you know, at the end of the day, nothing has really changed. The average consumer is still underwater on their house. They're still in danger of losing their job.
But
and the
Matt,
things
does
they
that
spend
make you
money
a
on
bear?
are still going up.